or even pulls back. We can do biotechs, and then you have PR plays. Biotechs will move, like, no matter what's happening with the market, like biotechs will typically move around and do what they're going to do anyways. So, that's not a huge deal. We are a little bit long in the tooth on the market. Like you can see here, we're at 91 stochastic. So we're pretty overbought, but we can stay overbought for a long time. We're just nudging across the upper Bollinger Band. So at this point, like, okay, so you have an overbought market. Who gives a shit, right? Like, you're going to keep doing what you're going to do. Like, you can see the market's been flopping around, but there's been a lot of plays both to the upside or downside. The one thing we do have to be just careful of, we're due for one of those kind of like, just, you see them in hot markets all the time, where you get like those intraday, just like 1% drops and they come out of nowhere. It can come from, just like a Fed comment. It can come from anything. Somebody could sneeze and, the market will drop. We're just in that weird phase where that's probably going to happen. So you should be able and willing to trade both sides of, the market right now. There's more than enough PR plays to kind of keep you guys busy. But man, some of like those small cap type of plays, they're so long in the tooth and short in the cock. Like, you're going to have a lot of trouble, like keep nailing those things down. Like you can see yesterday, like if you really look at like all the kind of small cap, like gapping plays, like these were like untradeable. So these are just like, right, like algo dumps, right, where they're just there to take your money. So it's like you get a pop up and then dump, pop up and a dump. And that's just, that's fool's gold. You can see like something like this. It looks great. Like, see all these wicks here? Like, this is just designed to take all your money. There's easier plays out there. That happens a lot. Like when the market gets extended, what happens with some of those like really kind of tiny pump and dump type of stocks that like everybody loves is they're designed to take your money when you get real extended and real frothy in the market. So I would be mindful of your locations on those kind of names, because you just never know. But like every day there's something like this, right? Where it's like, you just got like some big gelatinous turd of a stock in. Somebody's coming in hot and pushing this thing around. It's like, this thing done 10 million shares in volume. Like, who's buying this thing? But that's the sign of the times that we're in. Hey, Zamin, what's going on? So I think probably, take it easy on some of these type of plays. They're moving a lot better in the pre-market. If anything, like your pre-market scans, if you start running them about an hour earlier, like 8 o'clock, obviously I'm only here at 9, but if you start running them at like 8, you'll catch some of these, and they'll be frankly a lot easier to catch than if you're trying to catch them after they're already up like 100%. So just got to be mindful of that. You can see the C-Cop pop culture group, right? That just sounds amazing. C-Pop, pop culture group. Hey, IPOs have been hot, and usually the telltale reversal signal for like a hot stock is like when Marcos goes, hey, IPOs are so boring lately. That's usually when they pick up, right? So you had an IPO started getting real hot. So it's like XMTR, this pop culture group. These are like some good looking names over here. Maybe they got some upside to them. I personally, like, it's hard to trade these things when this one had liquidity on it, but the spread on this thing was like monstrous. You had 80 cents, 70 cent spread on this thing. That's going to be, that gets us a little bit tricky. So like this C-Pop, it looks all right, but do we really want to chase this thing up like 70%? This is something that, like, what I'll do is I'll run a scan like an hour into the day. If it's holding up or if it's basing out or something like that, then I'll put it on my list. I'll put it back on my list and come back to it. That way I'm like not so laser focused on it at the open, where I'm like trying to long something that's already up this much, come back in an hour, right? So you run the same scan, that you would run pre-market. I would run like a percentage change from open scan instead of a percentage change scan. So you can see like what's actually running around from the first tick. And if something like this holds up, I'll come back to it. But you don't want to really waste your mental capital on something that's going to have like a monster spread on it. And then it's already up this much, right? So you can come back to it. WNW, you know what? This is like an interesting one. You've got kind of a big base breakout over here. You know, this thing obviously had like this one day. It was like this one day hero, right? Fucking hero for one day. And then it came all the way back down. Shit, like that's pretty hot right there. So, like, you know, that's something we could play because this is like the move is just starting. I wouldn't consider this a huge priority either. It's got 4 million shares of volume. So, like, you know, if it pulls back or holds at the open, possibly we'll add, you know, I'd add that to the list, but that's not a priority. SPRO is a turn. This MRNN is a big turn. Like, probably at this point, like every single one of the pops on the stock gets faded off. DD Global. Fuck. So this thing had 200 million shares in volume. And somebody in my chat room yesterday like, it had volume. And it's like, yeah, fucking sell volume. It had volume. No, fucking sell volume. Real big difference, right? This is all right. I wouldn't trust a gap up on a stock that's already did this on its IPO. Maybe it does a reversal, but this to me looks like a cash out grab, meaning like, okay, somebody's dumping fucking monster shares like right off the open here, 40, 50 million shares. Like in the first fucking minutes of the IPO, you're unloading 50 million shares, right? That's like somebody that's probably invested in this fucking thing since it's like $1 and was like a gift, right? It's like no faith in this one. I probably take a pass on that. ALZN, this is like a little cult stock by all the small accounts goofs, all the small account goofballs, right? Like they see something like this is cheap and so they get real excited about it. Most likely this thing's a turd. It actually looked okay for a hot second. Somebody dumped a whole shitload of shares of this, you know, fucking probably half the float on this yesterday, like within a matter of minutes. These things are very, very tough because you can't trust a gap up on that after like this big dump. This is like a 30-40% dump, so you just can't do it. You probably leave it alone. I don't know why IPOs are so hot right now. They were all left for dead, like just saying, you know, markets are in cycles, but what can you do? Now, this is something I can get behind, right? So this XPE's got a nice range break over here. It's got good liquidity. You know, you got a small gap up on this thing, 4%. So you can't chase it up. And the reason is that, you know, every stock has its own range, right? So if you use an ATR, so like, okay, I got an ATR 5 on my watch list. But let's just say, you know, you're doing an ATR 10. So that's like your 2-week range of how much, you know, this stock moves per day on a 2-week basis. You know, so it's like $2.50. So your gap up, if you look over here, is at $2 right off the bat. So you sucked up a lot of the ATR on the stock right away. You know, where a lot of people get in trouble is they start doing patterns, right? So like you're doing like a flag pattern or whatever it might be. Some, you know, momentum pattern, ABCD pattern, voodoo pattern, whatever it might be. And you're doing that as the stock has sucked up so much of its range. So then what ends up happening is then you're sitting there complaining like, oh shit, there's so many failed breakouts, right? Like you ever hear, like you go into Twitter or something and people are like, the market's choppy, failed breakouts. It's like, no, you know, breakouts can only happen when they're supposed to happen. And that's when they have room to happen. Now, if you have a stock that has some type of news out and it's got an expanding ATR, meaning its ATR was compressed due to consolidation, and now it needs to expand due to, right, some fresh news, that's very different than if you have a pure technical analysis play, right? That's different. There's PR plays, or earnings plays, and then you have your technical analysis plays. Those are vastly different in how you would attack them and what you can expect from the range on them, especially when you couple in like this float on this thing's like 1 billion shares already. So this is going to be a hot one for us, but we gotta let it pull back essentially at the open. If it ORBs, and we've seen this on like XPEV all the time, say you get an opening range breakout on it, like say it just pops up and it doesn't want to pull back, and you get like an opening range breakout, like say up here, right? You get 3 candles and you opening range breakout. You'll see this. It will do the opening range breakout will probably work, but it'll pop like 70 cents and then pull back. So you can do opening range breakouts on something that may not have room, but it turns into a pure scalp play where, like, if you look at like something like an NTLA or something like that, right? From entry to, exit, this stock, if you, discount, last few days, it really only moved around like $2-3 a day. But like, we held this thing, at least the last lotto shares, for 20 points. So like, like on something like this, due to the location, the float, right, which is only 30 million, the fact that you've got a PR out and you're at all-time highs, you could get potentially 20, 30 points out of it. That's an obvious expansion of ATR, where like, something like XPEV, which is a thicker stock, is going to have not the same kind of expansion, right? Also in general, biotechs just move with elongated range. And the other thing to just be mindful of, like when you're really looking to see if a stock could just go on like a monster cock gorilla run, if there's a spread on that thing, it usually means it trades pretty thin. So like if you saw Edit or NTLA or something like that, beyond them just having some news out, if the spreads on these are like 30, 40 cents, 50 cents sometimes. So what happens is, like when you got a spread on it, it means it's thin. You don't need to know the float on a stock. If you see a spread, if a stock's got a lot of volume and you see a spread on it, it's fucking low float. And that's when you got that spread on it, like obviously we hate trading spreads. Trading a stock with a spread sucks when you're chasing, right? But when you're actually in early, or you're in at the right time, then the spread is your friend, because when everybody starts to chase it, they start to skip dollars. And so the spread is awesome if you're in early on a trade or you're getting it on support, because then when the chasing comes in, then the actual momentum, it goes beyond what you think it can. So the stocks with spreads, even though they're harder to trade, they end up having way more range, So you'll usually see stocks with like bigger ATRs. They almost always have a spread on them, and that's one of the reasons. Spread stinks unless you're in it, everybody's chasing it. Then it becomes a lot of fun, right? So that's just a little lesson of life on ATRs. Now look, this LI moves with XPEV, but you can see this one is too extended here. When you're already on 1, 2, 3, 4, 5, 6 green days in a row, the play is over. The play is over, and you can see this thing's like already back at resistance. If this thing has one more push, we probably actually short this piggy. This XPEV I think has more room. Now it seems like they do these like monthly delivery updates. You can see here June deliveries rise, 600% from a year ago. They do those delivery updates like every fucking month. And most months, like they're always say 500, 600%. And most of the time they don't actually follow through. So take it with a grain of salt. You're going to definitely need to see some type of pullback on it and some type of hold. And then, we'll be good to go. You see like NIO's also, right? So NIO and LI are really extended here. So my worry with the XPEV is like these things could just come back and fade the gap because they're extended. So then that will probably push the XPEV down. So there's a secondary thought process to the setup, which is like, okay, this XPEV looks great, but if, if LI and NIO, because they're so extended, pull back, then you're going to have a much trickier location of trying to capture this gain, trying to capture this gain properly. So you're going to have to kind of wait this thing out a little bit, but, there's more than enough stocks to trade today. Let's go into just kind of our regular old, watch list. There's some heaters around out there. All right. So we have, first of all, I do this for Mr. Mugatu because I thought of him yesterday. You got a range break on Airbnb. Finally, it took out its range. It's been trailing the whole damn market. It's been trailing all the hospitality, cruisers, everything. You got a nice range break here, like 155, 156. This is a choppy trader. It's going to need a little marination station at the open. But one thing you see with this stock is kind of like BYND, where if it starts to get going, it'll start to skip a little bit. It's also got a spread on it, and it's got probably some room. I wouldn't be surprised to see it staying into the kind of 170 range over the next, week or so. It'll need, you have to massage the balls on it a little bit. I think it should be okay. With the location of the market, guys, and probably I'm expecting some kind of shakeout in the next day or two. It may not last long. It could be just an hour or two, but we'll need some shorts. I think if we need 2 shorts, you got this Roku. This thing it hasn't had a rest day since 332. So you're up 130 friggin' points. You're up 130 points almost into the supply zone. So you maybe need one more push. This has probably got some room to fall. So if the market rolls over, this is on the top of the chopping block. It doesn't mean I don't like Roku or anything like that. It's just a day trade. But we might rip 10, 20 points on that bad boy if we can catch it right. Now you got a weak open on it, so there's a good shot it goes red to green. But like if it double tops or like if it spikes off, watch for a failed follow through. Failed follow through trades are very, very powerful. Failed follow through trades means like happens on momentum stocks. It happens more in small cap stocks, but also happens a lot on large cap stocks. Failed follow through is a powerful short setup, meaning like, okay, you have a stock that's been a heater, right? And everybody always thinks about what the previous day's momentum is. And so they want to keep playing, right, that previous day's momentum. So the stock will go like, say, red to green or something like that, and they'll rush in. But like they're forgetting that, the stock's been pushing really for 5 or 6 days. And so now the stock's long in the tooth and the daily is saying it's a short, and you get a weak open, you'll go red to green and have that one last spike up. And then it'll just fizzle out real quick. The bottom will drop. So you get all the chasers come in thinking red to green and then break a previous day's high, which are telltale setups that we like to do. But we like to do those on day 1 or day 2 of a move. You don't do them on day 5, day 6 of a move. So day 5, day 6 of the move, you look for the failed follow through. It fails, boom, you take it down. Failed moves are fast moves. Failed breakouts are the best moves to short. So I like this Roku for a potential short. We'll look for a red to green on this, a push, and then a fizzle out. Etsy. This thing it started at 160 or at 200, so it's not as extended as Roku, but a little bit easier to trade. This has got, you're in a supply zone right here too. Like you can see, like resistance never has to be like a specific zone, right? I mean, a specific line. A lot of times people think like, okay, I see this line, that's my resistance. That's not the case. Like if you have something like this hodgepodge of poo-poo platter going on over there, that's resistance. Like this is a zone of resistance that would be very, very hard to push through, right? Think about the amount of shares that are just sitting around in here, the amount of supply that's sitting there. So as you push and get more extended, more overbought into those levels, holy shiite, right? You'll get yourself, if you time it right, we'll get ourselves a nice 10, 20 point snapback on that bad boy too. Now let's talk about some longs that I like. If the market keeps going and we got like a little bit more speculative fever, then we've got EH here. We got a flag pattern on EH. It's looking pretty good. It does trade a little bit thin. You had CCIV with a big ramp into the close. You know, if CCIV is going to go, all right, then if that's the case, then, you know, we can go with XPAV, right? We can probably go with a little Nikola, you know, so on and so forth. But it looks like CCIV has probably the cleanest look out of that group. Fubo and DD both held supports yesterday, so we need longs. You know, we got Fubo sitting at the 20 SMA, remounted the 9. You know, it had a nice red to green yesterday. Watch how it reacts around yesterday's highs. And then, you know, you got DDD too. It tapped into the 9 EMA right at the open and just completely reversed. This one's probably holding up pretty well. You know, I've been staring at this QFIN for a while, but I'd probably take that off the list. One last one to just kind of keep an eye on. This thing, I don't know, fucking anybody ever been to Newegg's fucking website? It's like straight from the 1990s. I used to order some stuff on there. It was sick. Like in fucking 96, you know, you'd log on to Newegg from your AOL. Right? You remember your fucking Prodigy and you'd be hanging out. This thing had huge range. Man. It's going to open down with the SSR on it. If it starts, and look, man, it probably needs to pull back even more. But if it starts to pull back and hold, the SSR will probably trigger on this one. We'll see if we can catch it for a day 2. It looks like there's a lot of buying into the close. So we'll see what's going on this bad boy. But I think that's going to be a sweet spot on it. Yeah, hey, at least HYRE looks okay. I was looking at that the other day. It looks okay. This one lacks a little bit of liquidity, at least, you know, so I can't get the size that I personally would want on it. It's fine. It looks like a good chart. You know, if you keep your shares under, say, 1,000 shares, you shouldn't have a problem getting in and out. But if you try to go like, say, 5,000 shares, then you're going to have some trouble. So just watch your size on it. It does look like a decent looking chart. So guys, let's have fun. It's Thursday. We got things to do. By the way, I'm in Michigan. So Mr. Kidder, Alexi, Eric Williams, Jay Monty. I got a couple other ones laying around. Y'all hit me up. We'll do maybe a little bro bang and get something going. Northville, Michigan, the most magical town in Michigan. Maybe on earth. Northville's a magical place. It's the only place in Michigan worth living in. Let's do this. All right. Cool. Let's have a little fun. Let's do what we do. If I could turn back time, if I could find a way. Wonderful. Let's have a little fun here. Boom, boom. Everybody ready to roll? Cool. The Mox. All right, let's have a little fun, folks. Yeah, week open, a lot of names.